Many people think insurance is just about an emergency or exigency. The business of insurance is all about managing risk. So this becomes quite evident for all of us here to understand the factor. In a risk management, the first step is identifying the risk or hazard that might damage the property. Good morning and welcome to the session 1 in Unit 5, where we are going to talk about in management of banking and insurance services. We are going to talk about a very interesting topic called as the business of insurance. Now, business of insurance is something that is very, very interesting. Why? Because many people think insurance is just about an emergency or exigency. But let us go forward and try to see what is the business all about. The business of insurance is all about managing risk. So I would say that risk management is the most broad topic that we are going to talk here. Now, it involves taking steps to minimize the likelihood of things going wrong, a concept which is also known as loss control. It also involves a purchasing of insurance to reduce financial impact of adverse events on a company when, despite your best effort, bad things can happen. Now look at the concept of insurance. Insurance is not just about covering people. Insurance is not just about providing a backup. Insurance is all about understanding the risk that is involved in any kind of business. Now, the moment when you talk about a business, you talk about employment, or you talk about any kind of part-time work or wage-based work, there is some risk that is involved. The risk is not apparently seen to us, or we don't encounter risk in our day-to-day life like how we encounter other things. But then the risk is always there. The risk is something which is like a shadow factor which engulfs the business every time. So what does the business want exactly is a protector, a guardian who can come back and rescue the business at any given point of time. If there is going to be a loss, if there is going to be a scenario where the business is going to fall apart automatically, you need an insurance cover that understands the risk factor and gives back the ideology of how insurance will go and help them. So now what happens is that in insurance, first thing that we try to understand is to minimize the risk, not maximize it. Risk is there, but we cannot try to avoid risk completely. What we can try to do is minimize risk as far as possible. That is the reason insurance sectors are specific about giving insurance coverage to certain sectors. They know that because the risk factors that is involved, that is associated with the nature and kind of business is very high. So at some point of time, you need to know where exactly you are covering it up, how exactly you are taking the step of getting into the risk factor altogether. Now, moving further, we are going to talk about the loss control and insurance. A business that is indifferent to loss control may have higher than the average number of insurance claims. Now, this is a very, very important sentence altogether. Why? Because if you start seeing that if I am not concerned about the risk, if I am not concerned about what is happening to my business, I am a kind of person who will definitely go back and raise as much of claims as possible. This is because I have not calculated the risk. This is because I have not seen what needs to be understood, what needs to be seen, what needs to be analyzed. I have not done my homework. I have not done the groundwork of understanding the business. So a really poor history can make it difficult to find insurance. So insurance companies do not want to give it to those companies who find it extremely difficult in terms of making it return back, and they keep on going back claiming more and more money. So if it shows that your company is not good in managing the situation, and every time you are backing it off in terms of coming back to the insurance company and asking for more and more money, so that means to say that the insurance cover will not be available to you in future. So this becomes quite evident for all of us here to understand the factor why insurance companies will look only for those companies which are capable of managing themselves very well. So when a business is active and the business understands the risk factor clearly, even insurance companies become highly interested with it. Now, for example, let us take the case of Tata Coffee, or if you're going to look into Hindustan Lever Limited, or if you're going to look into companies like ITC. All these companies inherently have their own nature of risk. Now, for example, the coffee plantation business has got its own perils from the natural disasters like rain or a landslide, or there can be a flash flood, or there can be a climatic effect that could reduce the plantation, that could reduce the output altogether. So Tata Coffee might look into the business more from the natural calamities and the labor issue rather than the management perspective, because the nature of business is more dependent on climate and labor. On the other hand, when you look into a company like Hindustan Lever Limited, they do not have to worry about climatic hazards as what Tata Coffee is looking, because Hindustan Lever Limited is more into manufacturing of FMCG. They are more into a factory-based output production altogether. For Hindustan Lever Limited, the challenge is more from the manufacturing, from the operational hazards, including the labor factors. So for Hindustan Lever Limited, the way of looking into a business risk and analyzing it is quite different. Similarly, if I look into the example of ITC, which is into a diversified business starting from cigarettes to that of classmate notebooks, they have a different risk and a hazard profile altogether. So when all these companies like this, there are hundreds and millions of companies in this world who go and apply and approach for insurance. Now, when the companies go and approach for insurance, they are not just going to get the insurance just like that, because the companies would be assessed by the organizations. They would look into it asking, what is the kind of risk profile are we looking into? What is the nature and kind of business you are using it? So if you are able to have a control over losses, if you are able to see that your management is able to stick around with the environmental health safety standards altogether, then I have no problem in issuing you any kind of insurance or any kind of protection plan altogether. But then if your company is not active enough in understanding the situation, in understanding the scenario, and they just want to go further, claiming the premiums, claiming the sectors of insurance altogether, then companies will back out automatically. So at the end of the day, I would always say that it is the loss control that matters a lot rather than just going back into the insurance. How good are you in terms of controlling the loss factors? How good are you in terms of controlling all the loss-making units, the loss-making factors, so that when you go further, you are able to understand, you are able to see that, yes, you are able to create a better understanding, a better growth process, a better systematic business operation altogether. That makes a difference in terms of understanding the business. So that's why I would always say that it is mandatory for all of us. It is very, very important for all of us that we understand the nature of business. We understand the activity that is involved with this business. Then the risk hazard and identification. Let's go with the risk hazard identification. In a risk management, the first step is identifying the risk or hazard that might damage the property or result in injury to people. Now imagine when you are working in a chemical or in a company which is involved in manufacturing of explosives, or let's say about arms and ammunitions or dynamite. Now the risk profile of that company is extremely high. That is because the nature of the business is like that. So you cannot go forward and say that those kind of industries should not even exist. They are also a kind of business that exists very much within this earth. But then when you identify the risk that is associated with that particular company, you will understand that the risk profile is much more higher. The risk profile is much more on the greater side altogether. So some of the risk may be obvious. For example, a commercial cooking facility in your dining hall increases the risk of loss of damage to this building, possibly near it from the fire. So for example, from the kitchen, there are obvious risks. The cylinder might burst, or it might catch fire, or there might be some electrical impulses. You might get into some kind of severe losses altogether. But these kind of risks are obvious. You don't have to explain it further because it is inbuilt. People understand it. Yes, it is there. But then apart from this, there are certain risk factors which might be subtler and not clear, which means to say, I have not seen it, I have not experienced it, I might have not even thought about it in the long run. So now what happens is that, and your responsibility to protect it and go with it matters a lot in terms of making the insurance even more vulnerable. So what companies say here is that the company has to first identify, the insurance company says that the companies have to first identify the risk matter. They have to identify what is going on. They have to identify the risk profile. They have to get the complete company profile, which says where are all the challenges, what are all the challenges that we are looking into, and then we can probably look in terms of building up the insurance factor. Now, the risk hazard and the assessment that also comes into life. After identifying the risk and hazards unique to your camp, you need to understand. When I use the word camp, I also say about your company, which means I say that there are possibilities, there are potentialities where you might get injured, where you might get completely hurt, where you might have a probability that there might be some sort of problem altogether. So what we try to do is that we try to go into the hazard assessment guide. This is a guide, this is a handbook that is available to the companies in terms of understanding, analyzing the potentialities of the risk factors that are involved in the system. So unless and until the hazard and the systems are being completely understood, analyzed properly, we will not be able to go further and give a complete picture. So it is mandatory for each one of us that we first understand the hazard. We first understand what is the risk profile that is inbuilt, and then probably we can go in terms of analyzing the entire business. Now, moving further, we will also talk about the risk hazard control altogether. Now, the third step in the risk management after doing this is we have to do the risk control. What is a risk control? It is trying to minimize the risk. We are not again trying to avoid the risk. Please keep this in mind. We will not go in the process of avoiding the risk, but we are in the process of controlling the risk, minimizing the risk. So one obvious risk control option is to avoid the risk entirely. That's a brilliant option which I would like to say. Now, what is the easiest way to avoid going into a war, not to get into war at all? Now, that's an easy sentence said, but then the easiest thing is that we cannot just go further and say that risk will always be avoided, risk cannot be there at all. Every company will still have some risk factors. So what we try to do here is that we try to go as far as on the risk avoidance, but sometimes when the equation does not work out, we try to find out ways of reducing the risk that could probably help us in terms of building a better sustainable business in the long run. So our equation here is to understand how risk can be mitigated, how risk can go further and be reduced. Now, if you look here, identifying the risk hazards, we identify who's at risk, the hazard levels altogether, implement the control, reassess, and document process. Now, this might sound to be a very, very tedious process of doing things again and again, but that's what we are for, because that's what the insurance companies always say to in the organization, that you need to do this analysis, you need to do this basic step, a fundamental identification at any given point of time, because this will let you know, this will tell you where exactly you have made the mistake, where exactly we need to focus, and what kind of support that you need from the insurance company, so that you can be specific in taking the insurance. Then the risk avoidance. So there are many times when an individual can avoid risk. For example, an automobile car driving itself, which I would like to say. Now, if you are not confident of driving a car, it is always better that you hire a driver or you take a cab. But then if you want to experiment driving and you go and land up in making an accident that is quite obvious because of your negligence or your oversight, you've done this mistake. So similarly, many business always try to take the path of avoidance rather than going on the path and challenging it. So I always say that in the concept of accidents or in the concept of company, the business also gets into a lot of process where they find it that it's better to avoid the risk. It is better to not to go on that path rather than going and challenging things and finding out or experimenting it. This is the reason why, because insurance companies also say that if you know that that path is dangerous, avoid it. If you know that you are not able to see your goals, if you know that you are not able to tread along that path, you know that the nature of business involved is riskier, please avoid it. Don't try experimenting into it again and again, because that will not be able to give you success. Rather, it will lead you to controversial situation where the claims will go higher and you might have to do a lot of damage control later. Now, the other thing is, can we shift the risk? Now, as you look into the picture, now if you had a button in the car, like a dial, jog dial kind of a thing that you see in most of the advanced cars like an Audi and BMW, where you could probably just turn and the car keeps moving. Unfortunately, if you have that kind of thing, you would probably use this option called as transfer. All you want to do is just transfer the risk away from the business. You don't want to take business with you, because most of the time the firm agrees, people agree on this factor that there is too much of documentation, too much of premium that needs to be paid. The company has to do an assessment. The company has to look into what are all the different factors, the fees, the insurance, the riskier way of looking at it, how it needs to go, where it needs to go, how people would be assessed altogether, why the business documentation has to come, and where and all we have to put in the premium. All these questions can be avoided. But unfortunately, shifting of risk is not that easy as said. Because if you want to shift the risk, if you want to move away from risk altogether, you need to think a methodology. You need to build your system in such a manner that this risk can completely go off the system. So that means that requires a great amount of thinking. That requires a subsistence amount of thinking factor altogether, which can make the risk completely avoidable in nature. So that's why I would say that shifting the risk is very, very difficult. It cannot be done overnight. You cannot just rapidly change your business and say that shift of risk is done. So at some point of time, you need to pin this down. You need to understand it that we don't want risk factors further coming into the system at any given point. So this is how risk also becomes a very, very inherent factor that we need to discuss in closure manner. The business insurance factor, that, the final thing is that the business of insurance, which I would say is nothing but the insurance is thus the protection against the loss of purchase of insurance policy, and therefore, so insurance is a protective mode. Insurance will go in terms of protecting you against the emergencies and exigencies that come across the way. So, however, assume every kind of risk that is going to come, and the insurance is there to protect you from the risk, including theft, fire, burglary. You talk about any kind of risk, there is an insurance cover, there is an insurance package which is there to help you out. But the business of insurance is always about avoiding risk and minimizing the risk. It is not about challenging the risk. It is not about taking the risk and getting in and paying in for the higher premium. So it is always wise, which I would suggest, that you first understand the nature of your business operation. Make a thorough analysis about your hazard profile and then go in for an insurance, so that even in case if there is going to be a claimable event that is going to come altogether, you always have an option to go back and claim the best returns. So the company also understands the risk, and the insurance company will also be ready to provide you the best package as far as possible. With this, I come to the end of the session. In the upcoming session, we will be learning more about the insurance services. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this session.